Hey, Andy, Raj, pause. Ready for a new month? Hey, Pyro, Craig. About time? What's going on, Neem? Didn't enjoy your time off? Hey, FG, what's up? You were depressed over the weekend. It was too long. That's not good, man. You got to enjoy those weekends. As you can see, oh boy, we got lots of questions in the chat. Hey, good morning and welcome to all the new members. It's good to have you here. Just to let you know, if you can put questions in the chat in the live ES trading room in Discord, that would be great. Welcome to everybody. I'm JJ, I'm your jungle guide. And welcome to the Micro Futures room. And here, everything is about real world trading. Hey, June, I see your question. One sec. Hey, Eb3 Dave. So what we do here in this room is we actually focus on real world trading, which means we don't use theoretical theories and all those sorts of things to understand the market. We actually look at what's going on, and that helps us make real world tactical decisions. Yeah, I haven't done that yet, ATL. I'll get that done. So what we do here is we teach you how to trade not only tactically, but intelligently. Hey, yeah, I had a great weekend. This is real world trading. There's no fancy theories. Just like, there's no fancy theories in street fighting. Everything's great until you get hit in the face. That's what I teach you here. I teach you how to stay alive. I teach you how to cut your risk. I teach you how to actually have money. So when the real trade comes, you actually make money instead of making bad business decisions. Everything we do here is based upon business. There is a business that goes on that makes up these charts. They don't just spontaneously occur. Nothing happens by chance when trillions of dollars are at stake. Every battle is won before it is fought. And we are in a battle. Okay, we are retail traders and we're battling people with huge amounts of money. And they have agendas. And if we know what their agenda is, then we can swim next to the shark instead of into its mouth. Throw dust in their eyes and go for the knees. Look at you all full of spit and vinegar this morning, Pause. What happened? You burn out the banana leaves? What's going on? Hey, Sniper. What's up, brother? Too many peeps. What is that? What is a peep? So the levels are working pretty nicely. I extrapolated the levels from the beginning of January. What is a peep? Every time with you guys, I have to learn some type of new vocabulary. For every time I give you a piece of vocabulary, you guys give me another one. What's Steve got on here? PLTR. Oh, okay. It's an Easter marshmallow treat. Oh, okay. Yeah, it sounds like a trading indicator. Can we sell that? Okay, okay, I get it. I get it. Oh Lord, oh Lord, oh Lord. I should open up the let me just open up the chart book. Yeah, the levels are working nice, Andy. The levels, that 38 is working really nicely. We'll keep that around. I'm just loading my main equity chart here, just so if you guys need oh, sorry, wrong room. There's too many rooms, Steve. It's like one of those haunted mansions. Where's this PLTR? Oh, it's showing signs of life. Oh, that's good. Where's Steve? Where'd he go? Did he delete his thingamajig? Here, there's a PLTR chart for you guys. So what kind of monkey business has this thing got up to? Well, we had a spike on Thursday, and in market profile, is there a section where it shows the trades you're in? I'm in no trades right now. What I will do is if I am in a trade, I will call it out. I do not trade size while I'm on the mic with you guys because I just can't concentrate. I can't do both. I can't trade. So what I'll do is I'll do test trades using the micro, and I'll tell you guys, where my entry is and where my stop is and that sort of thing. I have not been trading very actively because I do not. Well, it's just been really busy in the room, lots of questions and things like that. So I haven't been able to trade actively. And I'm a person who needs to concentrate when they trade. I can't do 3 or 4 things at the same time. And that's just the way I am. But I will call out trades, that sort of thing. So what we do here is we look at a checklist. And this checklist, I'm just going to go over this with the new folks. And if you don't understand what I'm talking about, and there's probably a really high percentage chance that you won't, because I don't really speak like other traders, because I actually come from the business. So what we do is we have a market open checklist every morning. And is overnight inventory long? Well, overnight inventory is the Globex, and we look at it from the previous day. Now, the previous day is Thursday. We don't actually use Friday's references because it was a half day. Traditional market profile people maintain that you have to use the references from the last full regular trading day. So, overnight inventory, is it long, short, or balanced? Well, overnight inventory is long. All of the trading is above the previous day's close, which is Thursday. It is long, meaning all of the trading is above it, right? Are we going to open in or out of the previous day's range? We're opening on a gap up. We're opening out of range, out of value on a gap. Okay. Where was the position? The position at yesterday's close was here. It was taken up and sold through that Friday weird session and the Globex from Thursday night. So if you look at all of this as inventory, these people here, if we don't get any upside over 40.45, you consider all of these people are trapped long. Okay. Now that doesn't mean just go and short it indiscriminately. okay? In these markets, we have something called a lack of supply. And if you're a short seller, you need supply in order to short a market. If there is no supply, then you cannot short the market. It just doesn't make any sense. So here is the Globex overnight between this regular day and this regular day, and therein, in fact, is a gap here. Being that there is a gap here, a gap up means that there is a lack of supply and a short position just in this area here. And we did not have the supply to fill those short traders in. That's what's holding this market up. And it's been holding it up actually since this day. This profile told us in the overnight that supply had shut off. Very, very quickly, you can tell by looking at a market exactly what to expect. If you see a profile shaped like this, you know the supply is shut off. If you see profiles shaped like this, you know people are trapped short because there are spikes and price probes. The structure that prices lay out in a market tell you so much about what's going on. So what happened to that position in Globex? All of this was taken and sold up here. And now what they're attempting to do is if they can get it over 38, there are stops. Short sellers will have their stops at 38. So if they can get price over 38, that will trigger those stops and create the buying that they'll be able to sell some of this position up in this area. Okay. Friday was a massive stop run. Okay. Because size traders do not show their hand and they do not trade that way. So size long-term traders, people who buy to put away for 20, 30 years. So there's different types of buying in a market as well. There's buying for investment purposes, like I'm buying 10,000 shares of Apple and I'm going to hold it for 10, 20 years. And there's also, I've got 10,000 shares of Apple or I've got 100,000 shares of Apple. I'm going to push the market up so I can sell that at a higher price. And that is something a lot of people don't understand. The buying in this market has been to push price up to sell what they bought here, 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 and here. Now, that would automatically make you think, oh, if they're taking it up to sell, I can sell too. The thing is, when they take a market up to sell, they hold the market up. And they use what we call the big ass bid, patent pending. And that holds the market up while you sell a position that you bought at a cheaper price. That is something that a lot of people don't understand. And don't worry, you'll go through it and we'll take you through it. Everybody in this room has learned how markets function. There is a business practice that makes price move. It's based on how wholesale people conduct their business. And that is exactly what we look at. Now we look at the market. They're having trouble breaking 38. Most probably they should be able to run that 38 stop. If they cannot break 40.38, that means they don't have the power to do so, right? Or that there's a seller at 40.38 that they cannot overcome, right? And that tells you a lot. Say if you're long at 40.31 and you can't break 40.38, you should be getting out. We teach you in this room how to make money every day. We don't care about home runs. We don't care about, saying I made 300 points a day. We care that you spend a good part of your life, a lot of your emotions, and a good part of your health trying to learn this business. And it's quite nerve-wracking. So I want you guys to get paid for that frustration. I want you guys to get paid for that mental torture and anguish. So we trade tactically here. The motto of this room is take what you can and give nothing back. Okay. So if the market gives us 3 or 4 points, you take it, right? You don't hold out for 10. We teach you how to know that the market's only going to give you 3 or 4 points on a trade. All of these things we teach you in this room. So where are traders trapped? They are trapped right now at 40.38, 31, and 24. From 24 to 38, they are trapped. So if we do not get any upside where they can sell, all of that inventory is going to be trapped and cause supply. Now, does that mean take a short right away? Not yet, because the thing is, they could be holding the market up here to sell, and we have to wait until people are tired of buying and that supply builds up in order for the market to come off. So we're looking for an inventory correction at the open. There is a 60 to 70% chance that all of these people who are trapped will sell and the market will come down. Now, what's the flip side of that? The flip side of that is this market is in uncharted territory, okay? Which means there is no one here who has a cost basis, right? Because the market has never traded above 4,000 there's no one up here who owns ES at 4065, 4052. So there's no one to sell into this. The only supply we have is this. That's the only supply we have. We call that inside supply. And why is that? Because nobody's selling 10 million shares of Apple. Nobody's selling 5 million shares of Tesla today, right? This market is based on the S&P 500, which are based on stocks. So if nobody sells any stock, how the hell can the market go down? We use a lot of common sense in this room, right? The charts will tell us if there is a seller or if there is no seller. And we trade accordingly, right? We always use stops because stops are a business expense. It's like if you had a McDonald's, you'd have to pay the light bill and you'd have to pay, you know, employees and insurance. Stops are an insurance protection form for your account, right? It's insurance. If you take a loss, you still have money to trade the next time. If you don't use stops, your account gets blown up and you're out of business. We only have 100,000 shares, contracts traded. It is very thin volume. No, I haven't given you guys the new chart book yet. I'll do it. Right. No problem. Okay, so June is asking me, new order flow gets matched with market maker inventory, right? So exactly, wholesale, right, will match the buyer and seller and not absorb inventory. That is called trading flat, right? And when would wholesale do that? Wholesale would do that when they don't have big buy orders from their larger long-term institutional clients, right? We have not had that kind of a situation in these markets for a little while now. So what does that mean, right? Great, wholesale's not absorbing inventory, they're trading flat. What that means is we have to be very tactical in our trading. So if we're long and the market can't get to certain levels, we have to get out. We'll show you that. These charts that we use show us where the stops are. They show us where the position is. They pretty much show us everything we need to know. And what I do is I'll take that and I'll translate that onto a candle chart. So it allows you guys who don't have market profile to understand the process. Now, the candle chart is, it's how most people trade. And candlesticks are great, but they put you at a tactical disadvantage because they don't show all the information. See, they wouldn't be able to show a poor high. They wouldn't be able to show single prints, right? They wouldn't be able to show the structure of what's going on in a market. So here you can see that they're holding the market here above 40.35. There's a big bid here. How can I tell that? Because when the price came down in X period, each of these letters is a half-hour period. So X period couldn't hit my number here, my blue line. So that means there's a lack of supply. And look, there's only 85 contracts here. Why would there be only 85 contracts here and a huge number of contracts up here? Because the wholesale is put a big, large buy order here so they could sell what they bought here to hold up the market up here. And that's why people who are short here can't get the price lower. Because every time the market comes into that area, it bounces off of it because there's a large buy order there. And other traders know there's a buy order there, so they front run and buy ahead of it. So now what the market is attempting to do is they're trying to run the stops over the Friday high and our overnight high. And what they're trying to do is if they run those stops, they can sell a little bit of what they bought in this area up here. This is how markets are made, and this is the business model of the US capital markets. If you understand the business model of the US capital markets, you are less likely to get FOMO. You are less likely to short indiscriminately. And you are less likely to think in theory when, in the real world, a lot of theory that is taught in trading just doesn't hold up because it doesn't take into account the real world. And that's why a lot of traders fail because, they'll think, you hear things like, oh, all gaps fill. No, they don't. Right? Exactly. So right now, is there a trade? Right? And then also we teach you how to think. Flatline, thank you. How you doing, brother? We teach you how to think. Right now, should you be initiating a trade right now? No. Why? Because there's something going on right now that we don't want to get in the middle of. Right? We have gaps in the ES from down in March that have not filled. Right? A gap to the upside is a lack of supply. It's a short position, which means there are buyers there and there's no sellers to fill those buyers in. Right? The other thing a lot of people don't know is a gap happens when you open outside the previous day's range, not above the previous day's close. Right? So a lot of people will trade mistakenly thinking that there is a gap when it's an inside day. Right? A gap only happens when you gap outside the previous day's range. Right? So I get rid of the overnight here. Here's the previous day's range. And if we open here, we open on a gap because we're outside the previous day's range. Right? And there's that gap. There's a gap here that's not filled from this 39.83 to the bottom of this profile. It's only about 5 or 6 ticks, but that is a short position. And short positions are leverage, which hold the market up because there are buyers holding the market up. That's why you don't need that much buying. And you'll see that the market internals are weak. So these are the internals. It'll be the market breadth. This is shown here with a chart and here with what we call a breadth bubble. And then we'll have ticks. And the ticks will tell us what type of trading is happening. Is it at the bid or the offer, right? So now the volume point of control is moved up here to almost 5,000 contracts. So it moved from here to here. So once again, they're selling this here. So on the open, expect them to run the stops. And we'll see how strong the market is if it can get to these levels up here, okay? So this is a point in time where you're not taking a trade. You're waiting for this to resolve itself. So If we accept over the overnight high and accept over 40.41, you're going to be long till 45. 38 has worked really well. 45 is my next level up. And it is also the top of this zone. So expect some resistance there. Now, if we get to 45 and there is no resistance, the market's trying to tell us something. So we just don't blindly trade a level. We look to see how that level responds. Now we're running the stops. And now how big of a stop run do we have? Is it a violent stop run? Right? And what does that tell us? Because if there are a lot of traders that have their stops here, then the stop run will be more violent. If there are less traders who have their stops here, we will look above the overnight high here and fail and come back in. See how we went a couple of ticks up? This is telling us how much buying power is coming in right now. No, yeah, we use Thursday as the previous day high, Eric. This is what we should be looking at right here. So what I did was I just got rid of Friday's action. Right, I could put it back in there if you guys want to see it. But remember, this is the previous day high right here, which was right at my level of 40.14 and a half. And there's the previous day's close. So VWAP this morning is 40.30. That second standard deviation is up here in the 40.39 area where we just hit. So how these markets work for candle traders is they had a position here. They took it and sold it up here above VWAP. Once it broke VWAP and came back in, they amassed another position here and they sold it up here. This is how Globex works. And lately, that's how trading works. We just keep moving positions. You take this, you sell it here, you buy it back here, and you sell it here. So you're just doing this. And that is the nature of wholesale. There we go. Now we got a stop run coming. You know why? Because the market's opening in a minute. So they're taking those pre-open orders and they're pushing the market up using those orders. That is what's going on now. The market makers see some buying coming in, so they're taking the market up to fill those orders, especially market orders. So there we go. We open. We open at 38 and a quarter. Right away, you have very strong breath off the open. Now, is that going to hold? I don't know why I don't hear the ding, ding, ding. Okay. So we let this settle in. Remember, they have position here. So it is in their best interest to take the market as high as they can to sell it. If they cannot push the overnight high, the market will come back in. So let's just watch that. The breath is dropping a little bit, but remember, they have all the supply. Trading is all about supply. If there is no supply, we do not short. If there is supply, we do. Right? So now they just ran the stops over the overnight high. and they're holding the market up to sell. Okay, we're not initiating any trades yet because this is an area where we let them do their business and we let the people with the big money work it out. Then once they've set the tone, we can trade properly. A little patience will go a long way. Here's 41.5. Let's see how it transacts. Oh, okay. I do have Thinkorswim open, but I guess I didn't hear it this morning. Oh, I had my headphones on the thing. So what are they doing now? They're holding the market up to fill buy orders. There's 41.5. Let's see how it transacts. It stopped. Don't get involved just yet. Let it set up. This could be just a yield sign. See? So now they will push their luck as far as they can and push this market high as people come in to buy. This is what we call a gap and trap. So we should come now and back test 41.5. Let's see what the response is. If we can't get to 41.5, we'll go to 45. There's no supply. Who's got ES at 40.45 in their account? Nobody. Look at the breadth. Don't short it just yet. Let's see how 45 transacts. Forty-five is a big level, okay? So let's see if we look above it and fail or look above and go. How to differentiate between a gap and trap and a gap and go? Basically, you just have to sit and watch the order flow. So if we accept over 40.45, you're long to my next blue level and then the next one up. So you just got to sit and wait as it transacts 45. Watch the little red arrow. See how the breath got cut in half? But it's still strong enough to hold the market up. Don't misjudge that. This market has moved up 60 points on negative breath. Why is that? Because there's no supply. There's no supply in this market because institutions are not selling stocks like Apple, etc. Right? VPOC's right at 45. Okay, so we're still, now we seem to be accepting over 45. So look for 47.5. Naeem asks, JJ, explain something to me. I've been thinking about this. If we have supply, go short. If we have no supply, go long. I thought the whole idea was buy low and sell high. Okay, so if you're buying low, what happens if you're buying low and there's supply at that low? You're going to go lower, right? Remember when you think you've got the low on a stock and then it goes lower? That's because you have supply at that level. Does that make sense? Sure, buy low, sell high, but what tells you to buy, right? How do we know when to buy? How do we know when to sell? It's all about inventory, ladies and gentlemen. Okay, inventory is everything in this market. Okay, and supply is everything. Now we're going to come in and we're going to test half back because they sold that. Watch for this to fill in. If this cannot fill in, there is no supply. Okay, this is called backfilling. James Dalton calls this backing and filling. What it is you take a market up to create demand and you sell supply into it. $40.45 is a big level. Let them figure that out and then take the trade. No problem. Always be thinking, where's the supply? Where is inventory? Right? What's going on? Do not buy high, sell low. You guys are too much. So now we have people who are trapped above 40.45. See how that works? See how that little pink area right at 45, that's the volume point of control. So unless we get some upside movement, all the people trapped over 45 are going to start panicking and selling. If there are enough of them, we'll get down to 40.43. Raz, what's up, brother? Raz Mataz, our roving reporter in Dubai. Hey, CMD, what's up, brother? Don't be nervous, you guys. All right. Remember this, right? Bonfire of the Vanities. A nervous trader is a dead trader. Okay? Just like a nervous salesman is a dead salesman. Okay. I will teach you guys how this works, right? I'll make you guys life takers and heartbreakers. Don't worry. Thanks, brother. There's 43, right? Now we have a little supply. Let's go tickle half back. Now that half thing, we call it half back. For people who are new, that's an old Chicago floor term. Just like why do we use a half hour period, right? Because in Chicago, each period is a period is the first half hour. That's where this comes from. This type of charting was developed in Chicago by a man called Peter Stadelmeyer. And Jim Dalton brought it to the public. So what they're doing now is this is called backfilling, right? They took the market up, they created demand, and now they are satisfying that demand by selling supply into it, right? NASDAQ breadth is negative. That's good if you're a short seller. Here we go. There's 43, just like I said. All right, now let's go tickle 42.5 if we can get there. There should be a bid right here. Watch the little red triangle as it comes down to this white letter. That reaction will tell you all you need to know. You don't need any fancy software. You don't need any sort of indicators. Just watch. Did you see how it got one tick to it and bounced up? There's a buy order here. So the question is, do we have enough supply to fill that buy order? Spoofing. Right? That means there's a big bid there. How do you know where the buyers are? How do you know where the sellers are? You just watch the little red arrow. It tells you everything you need to know. Right? They're filling buy orders. Look at the breadth. The breadth was 7-1. So this is called looking above. We are looking above 45 and coming back in. Right? Just let them work out their thing. Is there a trade here yet? Not yet. Right? We have to wait until they set up the trade for us. Right? Sometimes buying half back does work, but two, definitely, definitely. Right? But you have to be in and out. Right? Remember, this market is not a greedy bastard market. Right? I'll tell you guys when greedy bastard day happens. Right? Greedy bastard day is when we can put a position together and sell it all the way up and have a nice time. And we haven't had a greedy bastard day in a while, right? Because institutions have not been in this market buying big sized chunks. How can you tell that? By the way it's trading. Let's take a quick look at the naughty NASDAQ, right? NASDAQ's opening on a gap. 13,531 is a huge level in the NASDAQ, as is 12,959. We have massive gaps. We have a huge short position in the NASDAQ underneath 12,675. That is why the market is the way it is. Russell's selling off nicely, which is good. Needs to let off some steam. We are right at that 40-45 level, right? And they will hold this thing up as long as they can to sell all of this crap up here. Once they are done, they'll pull the bid and the market will go down. If the only problem with that theory is if you hold a market up long enough, people will come in and buy. That's the problem. It's the same thing as why do people stand in line to buy an iPhone? Why do they stand in line to get into a nightclub? Right? They will chase price. Greedy bastard day? It is a holiday. So there's buyers here and they're just filling their orders and they're holding the market up to fill those orders. See how slow and methodical the trading is? Right? Why is the price action slow like this? Because they're trying to get people to come in and buy. So if you want people to feel comfortable buying, you don't jam the thing up and down like a jumping bean, right? You instill confidence with nice slow trading, and then they'll come and buy as much as you can sell them. When you want to shake them out, that's when you pound it up and down. Okay, breath is picking up a little bit, and we are over 45. Just let them sort this out. I know it's frustrating. Everybody wants to take a trade, right? For smaller accounts, I would suggest long over 48 to 53 and short underneath 38 down to this level here. Okay. Yeah, Tesla 695.46. Let me just get you a. We couldn't get to half back. There's no supply. Okay. So they will keep creeping this up. 51.27 is the second deviation from VWAP. So if you're long 48 to 51, 53 area, that's what you're looking at. And remember, use stops because nothing is guaranteed in this market. Okay? You have to use stops. It's the only way to protect your account. Oh, can you hear me now? Cool. Hey, pause. Is that VWAP weekly plus two standard deviation thing accurate at 40.52? Let me know. Okay. Thank you, brother. Thanks, Eddie. The standard deviants are at work. Oh, man. There's 1,300 on the offer at 50. Oh, okay. That's what we call a suppression offer. Hey, good morning. I can't believe you put that on. It's just to hold the market down so you can buy on the bid. That's all it is. It's called boxing a market. Can they be used for the SPY? Yeah, they can. I haven't filled these in here, but you could use this for any market. SPY, oil, gold, whatever you want. Stock. Let's see how it transacts at these levels. 40.53. There should be some resistance. 52.53. Oh, cool, Birdie. Yeah, it'll work on Bitcoin, on that Ethereum stuff, Tesla, anything. Yeah, Bullfighter got me onto the Ethereum thing. I mean, I don't know how to trade that stuff. You need a wallet and a money clip and a purse and all sorts of crap. I don't know. But good on you guys that are trading it and making money. I do care. I just just give me a brokerage account and let me hit the bid, god damn it. You need wallets and money clips and next Chris has got a fanny pack from the 80s. You know, got all sorts of stuff going on. There you go. How about the Ethereum fanny pack? It's a satchel. It's a European carry-all. Showbiz trader, I've been taught 30 minutes. Okay. Jerry has tried 15-minute candles, Dirty Grandpa in our trading room. He's tried it on 15-minute can on a 15-minute time frame. I personally haven't. We need to update the chart book levels. I was in Vegas. 40.50. Okay. All right. It's the slow grind up. It's 49. Tell me if that 1500 prints Icarus or if it pulls, okay? No kidding, eh? Well, you know what? Out with the boys, in with the men. You go partying, you got to be in at the bell. Our poor garbage cans on the desk were a testament to that. $30 contracts at the top. Is that a taper? Not yet. A taper is considered to be the end of the auction. But in this market, don't be fooled. Hey, Marco, what's up? See what I mean? What is a taper? It is when volume tapers. So it'll have 3,000 contracts, 700, 200, and then maybe 10. And that's used to indicate that the auction's over. Now that was before algorithmic trading. 1,500 is printing? Okay, they're filling it? So you know what that means? That means they're driving short sellers and buyers into that offer. So say you're long at 48. You should be watching the price action. If we can't get over 50, govern yourselves accordingly. It's one thing to look at a range afterwards. No, this is not, this is a very tough market to trade, right? What we're doing now is we're letting them set up the agenda for trading later on in the morning and in the afternoon, right? The cake is in the oven. You got to let it bake. The thing is, they can hold a market up a lot longer than you are solvent. Yeah, when you have a short position, June, you have all the supply. So you push your buyers into the offer. You know what an offer is, right? There's a bid and an offer. See, look at that. They're driving them right into the offer. They are selling to them, but at their prices, not where the buyers want to buy. Okay, so we have a double top now. Don't short that indiscriminately. Let's see how it transacts. There's volume at the double top. There's the stop run, 4 ticks, and back down. Okay. Don't get carried away yet. It's coming in. Now, they're taking market orders out. We're looking for 40, 45. Okay. If you are uncomfortable trading a fast market, just chill out and watch. You'll learn a lot today. Sometimes not trading and watching a market trade is the best thing. Actually, not sometimes, all the time. If you are a new trader, because you're trying to figure out what's going on. So if you watch the chart and you listen to me, I'll tell you what's going to happen before it happens. So now if B period cannot get to 45, you see lack of supply. So people who were short following price, Now we got them by the short and curlies, right? And now that's ripping to the upside. You see that? That's a trap. Will it come back? Maybe. We don't know. That's why you never follow price. So if you were short and we couldn't get to 45, cover. $2K lots at 50? Nice. Jesus, when I was doing deals, I wish I had buying like this. We have good excess in B period. So if we accept above the top of A over 50, we have no sellers. Usually in a market profile, that structure there where you have 4 ticks of excess means the auction is over to the upside and you would not be going long. We are still one time framing up. And what they are doing is they are holding the market up to sell, but their bid is strong. That's why you use my levels to trade in between. I'm being cautious, calling out trades because we are in uncharted territory. I will call out trades once the market has settled in a bit more. Let's see if the POC or volume point of control moves higher. Apple, Microsoft, Tesla. Yeah, they're all up. Cool, Timmy. See that 10,000 contracts at 49.75? So it's basically a big game of leapfrog, right? You take the position, leapfrog up, 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 up. Oh yeah, Google's up $57. It's up almost 3% on half a million shares. If that doesn't make you nervous as a long tail cat in a room full of rocking chairs, I don't know what does. You don't worry about that. uh, what post I posted, June? Was it me or somebody else? Oh yeah, I wrote analysis of Viacom and why that happened. Yeah, these stocks are, if you look at the institutional ownerships of these stocks, you'll see they're owned by firms that have trillions of dollars. This means two things. One, that those positions are paid for in cash as opposed to margin, right? So if you have $7 trillion, you don't have to borrow money to buy 10 million shares of Apple, okay? That means that that stock is not under pressure. If the price comes down, you don't have to sell it. You can hold it. It's paid for. That's number one. The second thing is what Dalton and other people call the other time frame, which is kind of wrongly labeled. It should be called the very long time frame, because their time frame, what the time frame means, time frame to hold an investment, right? So BlackRock, Fidelity, all of these huge, massive money managers, they hold for 20 to 30 years. Why do they do that? Because they get paid to hold it. They get paid a percentage of assets under management. So why would you sell anything if the amount of money you make every month goes down? Why would you sell? You would just want to keep gathering assets because your fees keep increasing. That is the business model of the US capital markets. And that is why the markets never go down, because there are people who own massive positions in Apple, Microsoft, Tesla, et cetera, who are well capitalized, trillions of dollars, who have that stock paid for in cash, so it's not susceptible to margin calls, right? And they have a 30-year-old time frame to hold. That's why the markets never go down. Here comes 4052. Let's see how we transact. In order to trade, you have to understand the business that you're putting your money to work in. If you don't understand the business, you will always trade against the business model. Stopped one tick short. We'll see. $52 is one of my market profile levels, Jax. It comes from the January balance. It is a shorter term level. So we have 52, 58, 3/4, 65. And then once, the thing is we've accepting above 40, 45 for now, right? So this is called one time framing. And you'll see how, yeah, exactly. If that balance didn't work well, I would have tried another balance, because I have this balance here. These levels come from March, April of last year. Hey, LC, what's up? How you doing? Good to see you, brother. How was the weekend? No one has a cost basis up here. If you don't know what a cost basis is, it means that there's nobody up here who owns the ES at 4058 who's going to sell. And that's real world information, which really makes a difference. Because you might have a level that you might have calculated that the market will go to and stop. But if the order flow doesn't support that level in that way, you can't trade it. You have to stop and reassess, right? Everything is order flow. All right, let's see how 452 transacts. They run the stops over 52. Let's see what 53 and a half looks like. The second standard deviation from VWAP is 40, 57, 55, or a quarter. Running over 52. Let's see what kind of oomph they've got now. One tick. One tick. Exactly, Eric. Exactly. Eric says shorts still have to cover if they are short from a week ago, and once they cover, the market comes in since market makers have enough supply. Exactly. And any professional trader will look at this market and go, Jesus, there's a short in it. Anyone who's ever worked a stock, everyone who's ever worked a deal, taken a company public, will immediately recognize that there's a short in a market. And what does the short in a market mean? It means that someone's trapped and there's no supply. So why would I short when there's a short in the market? I would go long. If I see selling, then I can go short. But if I see a market and there is clearly no selling in it, and the profile and the internals and all of that stuff will tell us B level couldn't get anywhere near the middle point of the range, that little white A half back, which is what a coincidence. It's at 45. It is kind of a really ugly B profile in the NQ. The NQ has a massive short position in it here. When people got short here, that did not fill. So people are short from here to here. I'm talking large traders. And then there's a retail short in the NQ from here to here. There's no supply. Does anybody have any questions? This is called one time framing, which means we are in a trend up for 2 periods only. Big stop run over 53 half. Nice trading, LC. Nice trading. Watch the reaction. Watch the reaction now. Do we stay over 53 or do we come back in? 9 is a proper taper. Nice work, FG. Nice work. a proper taper, 9 contracts at the top. But the thing is, we're right back up there again, right? So in the old days, when human beings traded this market, that would mean that the auction to the upside's over. But with mechanical trading through algorithms, it is not as accurate. Yeah, these are not normal conditions. This market is not trading in a quote unquote normal fashion. Okay. It is being stretched beyond capability. What indicators did you key on to indicate that they were short? Structure build. No indicators at all. Indicators there were structural clues. One in the ES that gap did not fill at 38.94, right? That did not fill. That means that there, even those 6 ticks or 5 ticks or whatever, right, is telling me that there is no supply. In the NQ, it was glaringly obvious that they were short. It is like M period. Actually, the last bunch of sessions in this market have been a massive, massive M period, meaning that the market has just been completely pushed higher and higher and higher. And even, as Dalton and everybody says, we are dangerously long. There's just no supply. There's just no supply. So if you are long, take longs from my level to my levels, right? I do not suggest stepping in front of this market on the short side at all, right? There is no one willing to sell at these prices. Let's take a look at our next level is 58 3/4. Whoa, what happened there? And then above that, 65.5, which is right there. Long 49, flat 58/4. Perfect, perfect. That's how you trade it, Andy. Right? Just take the trades between my levels and you'll be fine. That's all you have to do. And you can make a good income doing that. No, we're a gap and go. Sorry, Dave, I forgot to announce that. Sorry, little Monday morning brain. You'll have to excuse me. I'm still astounded by this. Well, I shouldn't be. Profile never lies. That's the thing, Once you accept over a level, once we accepted over 4017, just, you know, this was a huge tell. The fact that we couldn't get under 3934, right? And we could not get in the base of that spike. Wow. Yeah, I'll look at that in the equities room, Dave. The equities room, Steve will get you get you in there. We have the micro futures room and the equities room. Second door on your left. Let's see if we get any responsive selling here. There's a little bit. So remember, if you use my levels to short, if we can't break 56.5, what does that tell you? There's no supply. Because I know people will be shorting. Scarface is there's a lot of trading lessons in Scarface. One, if you're short, don't get high on your own supply. If there's no supply, you can't short. Number two, never underestimate the other guy's greed, especially in this business. It's a slow grind up. Do I recommend going long here? No, I don't. Do I recommend going short? No. I need this market to trade a few more hours or at least another couple of half-hour periods before I can figure out a way to trade this. Chris and I have both been trading. I mean, if you put our trading experience together, we've got like 60 years between us. And if we're not initiating trades, that should tell you something. Right? There are times when if guys who have been doing this for 30, 40 years aren't trading, we don't know if we have single prints until the next period will brew. Now, if we have one time framing up and single prints, that tells us for sure there's no supply, and you don't want to stand in front of that short. Yeah. For folks who think it's too high, it has to go down, that theory never works. It's how Chris and I made our clients a lot of money. Right? And it's like I say, Everything in the stock market is about supply. There is nothing else that you need to concentrate on other than executing around profile levels for now, right? The market will change. That's okay, June. Don't worry about it, man. Market's not going away, June. It's not going away. Do I have any plays that I've been watching, like stocks? No, I just I just look at stocks to tell me where the general market sort of is. I only trade the ES. The reason I trade the ES is because I know the order flow intimately. I've been watching the market 18 hours a day since 2012, and I know when to trade it. I know when not to trade it. I know when there's opportunity, and I know when to stay the hell away. Um, so for me, it's a more relaxing market. Yeah, well, I mean, I have had a girlfriend now for a while, so I do like weekends. But for 28 years of my life, I hated weekends. No, I don't hate weekdays. I love doing this. I find this is a lot more relaxing than taking companies public, let me tell you that. Yeah, it's easy if you don't have bonehead business partners. Oh, Microsoft's up $2. Microsoft's up 2.3% on 10 million shares. So Microsoft has 7 billion shares in its floating supply. So if you can move if you can move that on 10 million shares of buying up 2%, $5 on a $248 stock, that means that it's a very thinly traded stock. Why am I not trading this? Number one is because this market today has a new agenda. So I'll wait until later. It's too thin. And I'm also on with you guys right now. So I can't concentrate and trade it properly. Right. This is not one of those trading rooms where I'm like, I'm long, I'm short, right? I'm trying to teach you guys how to think tactically. So I can't do that. If I was trading right now, I'd be ignoring you guys. And you guys pay for an education. So that's number one. The other thing too is I like to wait till a market sets up so I can see the agenda, and then I like to trade the edges of it. That's just a personal preference, right? Well, it's thin, June, because it's not two-sided, right? There's no selling, there's no back and forth, right? I don't like to trade a market where there are no sellers. We're particular, right? See, because we've been doing this a long time, we're not jonesing for a trade. We're not going, oh, I got to take a trade. I got to take it. We know that there's going to be another trade. So we're not on the edge of our seats, right? So we like for the market to do its thing and tell us, oh, you know what? There'll be some good trades this afternoon, maybe in Globex tomorrow. got a whole fresh month to trade, right? I'm not suggesting you guys don't trade, but I'm saying just please please just use a little caution. You wait for the good trades. You don't force it. Tell the story about the bull. Oh, patience, right? Patience, patience, patience. Okay. We did 14 gaps pre-March, apparently. You wait for the good pitches. So we have 14 unfilled gaps underneath us. There goes that theory that gaps don't that fill. My God. Jesus. If that doesn't tell you that there's a lack of supply, I don't know what they're trying to accomplish with this market, but oof. Just because it's a house of cards doesn't mean you can't short it. No, I mean gaps underneath us. I don't know where he got that data from. Somebody just told me that. And off we go. Good Lord. So here's a perfect example of single prints. Single prints here. There is no supply. 65 half. $65 half is the next level, Eric. Yeah. Yeah, this is any seasoned professional trader is just kind of going, ugh. Welcome, Rob J. Yesterday was a price probe. Yeah. Ray and Fingers deal with that. So how this usually works is a market will trend up in A, B, C, D, and E. F and G periods will correct inventory in a trend market. Friday, yeah, well, Friday was it was a price probe, but they in traditional profile they tell us not to use those holiday structures. So we'll have to see if this stupid thing ever comes down again, if we get down to that area and see if it's responsive. How about that, CMD? I'm not, I won't dismiss anything. I'm always very open-minded when it comes to markets. So when we come back down, we'll see if that area is at all responsive. Every asset class seems to be higher today. No. Poor highs and lows implies price going back up. Right now, we don't have any poor highs or lows. Usually, when you have a poor high, it means there's trapped longs, right? But it's in context. So if you have a poor high, right, and you're at new levels like we are, right, and you have people trapped short underneath it, you are more likely to correct it. Crude is down, buck 68. Oh, how do you interpret data from market data into chart patterns? Like candlestick chart patterns, Bill? Or I don't use candlestick chart patterns at all. They're meaningless to me. I don't read candles at all. I put the candles up so you guys can interpret the real data from market profile into a candle. But I've never traded using candlesticks. There's just not enough information for me to trade with any kind of confidence on a candlestick chart. It just makes no sense when you have all the information in front of you. It's a very I got onto market profile right when I started trading, and we don't use charts on trade desks because we make markets. So we're actually making the candle instead of trying to trade it. So when I came to the other side, I tried trading candles, and it lasted for about a week and a half, 2 weeks. Then I found market profile, and I never looked back. I try and translate what's going on, but if you look at this candle chart, it's very, very hard to where are you going to put your buy, where are you going to put your stop, what the hell's going on, where's the action. The candle chart doesn't show single prints. Um, it doesn't show lack of supply, right? So what the market profile is we're taking a candlestick and we're opening it up and we're like looking at it under an electron microscope. Sorry, one sec. Yeah, this very, very hard. So this is prop market makers. This market is being moved right now by people who have what we call fast money, right? So if Chris worked at Goldman and he retired or he left and he started a small fund with maybe 300-400 million dollars, his prime broker will give him 3-to-1, 4-to-1 credit, and he will use that credit to trade ES, take about 50-100 million dollars, and he'll play with that. Jesus. I can't believe they're doing this. This is a trend day. This is a trend day with single prints. This is something you do not short. The profile is telling you that there is no supply. Hey, Mike, what's going on? Yeah, we are one time framing up. This is just 1, 2, 3, 4. One time framing up with gaps. These structures are telling us, the madness is crazy. You tried to open all my books at once? Oh, Eric, that's just too much resources for your poor computer. I don't even do that, and I have 64 gigs of RAM. Yeah, just go to work. It'll take the temptation away. Does anyone have any questions? I know a lot about what I'm talking about is probably foreign to a lot of the new people. Just bear with me. I'll be doing a class tomorrow on how this all works. It's the real data, right? I don't know what's our limit up. I didn't even consider that. I think it has to be more than, we're only up 1.3%. Bill, I like to trade inventory corrections. So sometimes I'll trade pre-market. Sometimes I'll trade, you know, um, it all depends on the order flow. Thanks, Mac. Um, See, now you know what makes the chart, right? The order flow builds the chart, not the other way around. And market profile is the purest form of order flow trading. The NQ hit 13,531. So we looked above that. Do we stay above that or come back in? The breadth on the NQ is not that great. This is a perfect example of what happens when there's no supply in a market. See how the breadth is lackluster? Well, you have a massive short position, and that's what's pushing this market higher. So does that make sense, Bill? I'll trade when the order flow supports it. Breadth has been crap for a long time. And what does that tell you? When breadth is crap for a long time, it means these markets have a short position in them. These are not easy markets to trade. That's why I like you guys to actually sit and watch for a little bit. We'll see, Mike. I would imagine some are. I'm imagine some are forced, right? Thanks, Bullfighter. What are you RSI guys seeing for people who use RSI? I'm just curious. Anyone use it? I don't, but just wondering. Yeah, the Russell's the only thing that's sort of correcting. Oh, Perry, to get a Zoom link, you just go like this. And we're going to come down and fill this area here. And in 9 minutes, we're going to have single prints again in C period if C period opens anywhere above the B period high. We should have some responsive selling somewhere. So now if you're a short seller, and just for example, you took a short, right? Do you see that area where it's 652, 163? Do you see how it's thin here? There's a lack of supply here. The numbers even show you that there's a lack of supply. Thanks, Nicole. So if you are short, for example, just for an example, and this market cannot fill this area in here, it tells you that there is no RSI. I mean, no supply RSI. Excuse me. So these charts, these TPO charts, all what they do is they have clues in them on whether we should be going long or short. Right? When you have this green box here of these single prints, this is a big short position. We have a short positions from 40.50 to 56. Yeah, of course we can fake RSI. I held a stock at 90 RSI for 3 months. See how we're having trouble getting down here and filling that? That means we don't have the supply. Let's wait a little bit. Exactly, right? And RSI is subjective, right? So if you're trading a stock that has high RSI and doesn't have a lot of supply in it, like a low float stock, you're more likely to be tricked. Yeah, I held a stock at $30 on NASDAQ for 3 months because they needed to hold the price over $30 to get a financing. So what I did was I engineered a short position that was bigger than the float. Sound familiar? Filling it in. That was fun. Good days. Well, until we took down two clearing firms. But that's another story. Trader Stewie? Story time. No. Okay, so that's good excess. That's good excess. So let's see where we land now in the next 6 minutes. Jesus. Patience is testing you, Dave. Think about it though, right? You got the whole week in front of you. You got the whole month. Trading is a marathon, right? It's a marathon. There's going to be so much opportunity. Never think that you're missing out. Let's see now. Now you get to watch how that little red triangle acts when it gets to my level of 40.58 and 3/4. Will it get there? Right? Do you see how there's only 700 contracts right there that have traded? That means there was a size buyer here. Do you see the 7,000 here? There's somebody buying it here. Good morning, Raj Kumari. If you could just type in Discord, that'd be great. So I don't miss your chats. Anybody who has questions, please ask. Hey, Java Kitty, how you doing? They're just basically trading back and forth in the excess of C period. So in 3 minutes, the next period will open up. If you can just type in Discord. What was his name? Lumley? Something like that? Lumberg. Yeah, I need the TPS reports. Bill Lundberg. They towed his Porsche. Oh my God. Pulled the bumper off of it. 2 more minutes here. Thanks. Depp, I got to take this off. People get upset. We have a meme thing. Yeah, some people, those things annoy a lot of people, and it kind of disrupts the flow. But there's a whole off-topic meme. They've invented that word from. So in another minute now, we're going to have the next half-hour period open. Were you able to profit when the Rona? The Oh, yeah, we had some really good trades. The Once we figured out how wholesale stepped aside, March, April were really good for us, and responsive longs were nice too. But the problem was the market makers stepped away and stopped absorbing inventory, and what that meant was we had to trade very carefully because they were taking stops like madmen. Now you only have a few single prints here. Let's see if those hold. Right, we have 1, 2, 3, 4 ticks. And we'll see if that holds. Okay. So you guys have a great afternoon. Please DM me if you have. Aha, they filled. Aha. Oh, let's see. The plot thickens. Excess. Breath is starting to go down. Okay, so we're going to be looking at 40.58 and 3/4 for a responsive buy. Let's see what happens over there. Point of control is up here. Watch. See, there's a bid right here. Do you see how the little red arrow triangle, it hits that level and it can't hit it to the tick? There's a bid right there, right? We're shorting SPY. What are you, nuts? No, just joking. Sorry. So you see how it's acting right now? So we just need to see whether or not we have enough supply to overwhelm that buy order, fill it so the market comes down. Okay? Be very careful going long and be careful going short. Just use my levels. If you guys are having any problem at all not seeing something, stop, don't trade, message me, and we'll work through it. Okay? Have a great afternoon. Thank you so much. And we will see you in the equities room in an hour and at the close. I do an hour at the close. Bye for now, everyone. Thank you so much. New people, please stay with me. We will make sure that you learn how all this crazy stuff works, okay? Have a great afternoon. Bye for now.